Let's tell you that the Nigerian Exchange has suspended trading in the shares of Zichis Agro-Allied Industries Plc after its stock price soared 772% since listing, prompting a regulatory review. The halt, effective Monday, February 23, comes as the bourse investigates extraordinary price movements that raised concerns over market integrity and investor protection. Zichis shares jumped from 1 naira 99 kobo after listing to 17 naira 36 kobo, triggering scrutiny under NGX rules designed to ensure fair and orderly markets. Well, to join me on this particular one, I am joined by Muktar Mohammed, CEO of FinancewithMuktar. Thank you so much for joining me today.
Thank you for having me. Welcome back.
All right, thank you so much. And I'll also be joined by Chris Ogbaisi, the Executive Director of Finance and Strategies, Zichis. Thank you for joining me too. All right, I guess I have just Muktar on the call right now. Now, sir, again, thank you for welcoming me back. And we understand Zichis has been suspended after crossing 772%. Now, if you calculate from the close, it's closed at 1 naira 99 kobo on its IPO day. Meanwhile, it was listed at 1 naira 81 kobo. So we're using the closing price on January 20, which is 1 naira 99 kobo. So if you use that, what we're saying is a 772% increase in its price valuation in just 1 month. I mean, it's even interesting. The last trading day for this particular stock was February 20, and it was listed on January 20. Did you see this coming?
What did I see coming? The price increment or the suspension?
Did you see it coming?
No, I didn't see it coming because you need to know the technicality in terms of trading. You just have to move it by 100,000 units and it kept moving. And that was basically, there was nothing really technically wrong with what was happening. But again, I think the exchange really had to look at it again and begin to look at where do we have these numbers coming in from, because you look at the fundamentals of the company, then you look at the pattern of trade. I think that was what the exchange really had to look at, the pattern of trade. It more or less like, though they've not come out clearly, but more or less look like an insider dealing in terms of price manipulation and to make sure the price get to that level that it is. And don't forget that the sector that the price was being listed is in the agricultural sector, or the agricultural sector, where you have Okomo, yeah, you have preschool. So at that time, a lot of investors that were looking at preschool and looking at Okomo, and they couldn't get it at the price above 1,000, was looking at this stock as one of those stocks that would definitely be where we get there in the near future. Maybe not 1,000, but they looked at it like a stock that would get to 100 naira, 150 in the shortest possible time, because they couldn't get those other stuff. I think with what we call in the stock market, we call the bandwagon effect. If I can't get in the big ones, I can begin to mop up the smaller one, because the smaller one, when turn becomes, it also be profitable. I think that's what really happened. But the exchange have to look at it, because again, it has never happened in the history of the exchange to see a stock being like that, 772%, and it was still counting. Don't forget, it was still counting before it was suspended. It was not abating; it was still counting. So, and you look at the fact behind the numbers, the price, the business, everything doesn't look real to get to the price it was getting to. I think this is also a lesson to investors, that you also have to look at the fundamentals of the companies before you begin to invest your money. But I think the exchange is investigating, because remember that it was listed by introduction. We've seen other stocks that were listed by introduction where they are today. Muktar is one of them. I hope the exchange also have to look at that, because again, when you talk about introduction, listing by introduction, there is certain flow that you will make available for the public. And what we've seen over and over again is that some of these flows are not made available. So then the demand inside, the supply is low, definitely the price will go up. So the exchange also have to wield in the big stick to make sure that if you are listing, you have enough flow to attract other investors, rather than those behind the listing being the only one that have large volume of those shares.
All right, so can we put this blame on the regulator, or not necessarily the regulator, maybe the NGX, for allowing the listing to happen in the first place? Because on the one hand, you've mentioned two things that have germane. Because on the one hand, you also want to look at the sector. Like you said, Presco or Como, they are doing very well, good numbers. And so this looks like bargain hunting for some persons. They want to jump on it. And then you also look at the fact that only 600 million units of this particular share were listed. And from 21st of January, we could count bids in excess of 800 million units. Now, could it be the case that we are looking at, demand and supply, like you already said? When you look at demand and supply, and you also look at the industry, it could be bargain hunting. But then I think on the part of the NGX, maybe NGX should have probably waited for them to probably have more free float. Or what do you think? I mean, how do we balance all these?
You see, in terms of this is introduction by listing. That was the first route to introduction, and which they did. And I mean, listing about. But again, the MGS should have looked at them increasing their float, either during an initial public offer or a right issue, or I mean, whatever they need to increase their float. That's what we keep saying. That float. If today I'm talking about Muktar is not really available in terms of volume. So we are seeing those here, the index. The NGX must put their big stick on some of these companies when they are being listed and let them know that you must make your float available for Nigerians. Sometimes you do the listing and sometimes you have about 94% of those stocks in the hands of those that introduce the listing. So you only have about 6% in the hands of the public. And they always will say that, okay, with time we'll begin to release most share into the market. We don't see that happen. And when it does happen, sometimes it happens when the price has astronomically gone up. And so they are also feeding on designing investors. I think the NGX, yes, they've come, they're where the big stick. I'm excited what they have done, especially the times like this, Perpetua. Remember that we are seeing a bullish run like we have never seen in the history of the market. And what that would have done again is to reduce investors' confidence in the market if the bubble in some of these stocks have happened. So I think in as much as we say they would have done it earlier, they must have done the right, but at least coming in now to where the big stick, it's also commendable to them. Because we don't want what happened in 2007, 2008 to happen, where at that time it was not even in the area of listing in the market. Even if some of them listed, they were doing private placement. A lot of those private placement never saw the light of the day. And that's why I'm using this medium to talk to the Security and Exchange Commission also to begin to look at companies that are beginning to do private placement because they are seeing the bullish run of the market and thinking of how to just play on the intelligence of Nigerians. Then Nigerians start buying those stocks by private placement and believing that they will be listed. At the end of the day, those stocks are not listed. We are dealing with this because it was listed in the NGX. The Security and Exchange Commission must go further to look at some of these stocks that are not listed in the NGX that are now beginning to do private placement without even having the pay degree or to be listed on the NGX. Remember again, the NGX also is
Mr. Mohammed.
It's the same thing we're talking about. Yeah.
All right, Mr. Mohammed, please hold your thoughts. We're going a very quick time out. When we come back, we'll continue. Please stay with us. Glad to know you're still with us, and we're still talking about Zichis, which has been suspended. I mean, trading in that particular stock has been suspended by the NGX. Thank you so much for staying with me, Mr. Muktar Mohammed.
Yes, what I'm saying in terms of liquidity availability should be extended to other companies that have not made their stock available for the investors. So I think the NGX should not just stop at what they've done. Now they should also look at other that have been listed and some other companies that have been in the exchange for over 3-5 years, and yet their float is very, very, very small.
All right. Also joining me on this call is Chris Ogbaisi, Executive Director, Finance and Strategies, Zichis. All right. I guess I'm still not... Okay. Hopefully he joins us before the end of this conversation. Now, let me come to you. I mean, to a very large extent, it feels like we've taken a side. Like, we feel like it's probably just demand and supply at work here and all of those things. But then you've observed many market cycles. Does this specific price action mirror, maybe a classic pump and dump scheme? And what are the telltale signs that retail investors should probably have noticed before the suspension?
Yes, I think it's a pump and a dump scheme, and it depends who is the dump now and who's being.
Let me come to you here. Let me come to you here, because on the one hand, we're saying, okay, there's liquidity issue. There isn't much. We're looking at 600 million, and bids are in excess of 700, 800 million, and all of those things. That could be responsible for the price action and all that. And we're also looking at the sector. And then on the other hand, you're saying it could be pump and dump. So what exactly is it?
Pump and dump is normally part of the market. Perpetual pump and dump is part of the market. So if you don't want to be those that will be dumped on, then you have to have education on how the market. Then you have to contact your broker. You have to contact your advisor, your financial advisor. Because what we see in Nigeria, Perpetual, is that a lot of Nigerians now becomes advisors on the social media. Every celebrity today is talking about stock. Every content creator now, that's the in thing in Nigeria. So everybody must be buying stock. So they come in and begin to give you numbers that they cannot substantiate in terms of fundamentals. So everybody has become a stock advisor. So that for me is the major problem why a lot of people are dumped. Because you just look at these particular stocks now. What is driving it? What's the fundamental? What have they done for the past 5 years? They are new listing. So there's a limit to where this thing can. But again, like you said, you can't blame them again. Also, they are the investors that also were not contacting their stockbrokers or their financial advisor. Because sometimes, a lot of people have contacted me as regard these particular stocks. And I told them, I said, look, the financials are not looking the way the price is looking. If you look at the earning per share of this stock and you look at the PE ratio, you look at all put together, you realize that it's a dump for a lot of investors. But most investors were looking at it as, okay, we'll just go in, make our money and come out. But they've forgotten the part that it takes somebody to want to buy for you to even be able to exit the market. That's where the dumps come into. So I think it's just a lesson that a lot of investors should always seek advice before buying stock. Don't just buy the stock because somebody is talking on social media that does not even have 1 unit of that share, that have never bought a share before, but is telling you what to buy, how to buy, how the stock have moved by 772%, what is driving the stock. It's just the way that it is because of the advent of social media. And I'm happy again the Security and Exchange Commission came out also to advise Nigerians that it's not in the place for people to begin to tell you what to buy. Seek advice from your financial advisor and your stockbroker.
All right. Are you ruling out anything like insider dealing in all of this?
Well, we have to wait for Security and Exchange Commission to come up with their finding. I think the suspension is temporary, and even the company have said that we don't think we have done anything to warrant the suspension. So I think I want to keep that. You don't just bring out that now. You don't know what the evidence are. But again, from where we are sitting, when I say by listing by introduction, we have to look at those who were listed. How many of them had that? Were they selling? Were they the one that moved the price? What was they doing? Were they really selling to investment public? Were they just there to just put in the minimum amount to move the price daily? So those are part of what the Security and Exchange Commission, the NGX will be doing. So we don't want to preempt them. We expect that the report will come out soon because a lot of investors have their money tied there now.
Absolutely. And I wanted to ask you what happens or what becomes of their monies. Well, we'll talk about that some other time, maybe when the result is out. Thank you so much, Muktar Mohammed, CEO Finance with Muktar, for your time on the show today.